following is a presentation of TFNN.
Let's go to David from Clearwater.
Hey, Steve, thank you for taking my call. I just wanted to pass a compliment to you. Taken a lot of classes from Tom since I became a Tiger back in 2009, and they were always phenomenal classes, and last Friday was my first class with you. And just want to say, Steve, fantastic. You were well prepared. The material was excellent. It was timely. It was a really, really, really good class, and you kind of opened my eyes to a few things that have enabled me to use your terminology. Take massive action.
Hey, there you go. I love it.
Live at TFNN, The Trader's Edge, with your host, Steve Rhodes.
And he's picked out a landing spot that is a good 25 feet above the hull.
There's a good chance he doesn't get this inside the Marco's ball.
Well, here it comes. Oh, my goodness. Anything like that. This guy's pretty good.
Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the June 26th. Terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a wonderful Wednesday. Let's make sure we do all that we can to have a terrific Thursday, folks. I know I'll do everything I can during the next couple hours to teach you how to master the tools for trading, and that includes the tools of the mind, because when we can master the tools of our mind, we begin to think like a strategist, and that's really important as it applies to every aspect of our life, especially trading. You know, some of the tactics that we use in technical analysis, you'll hear me use these today: A to B equals CD patterns, Fibonacci expansion and retracements, Gartley butterfly patterns, and of course, Japanese candlesticks, because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike most traders who just simply focus on tactics, you and I know that to really achieve our goals, to really achieve our dreams, we've got to always think like a strategist. So the real key to trading and investing, the real key to get our money to work harder for us than we do for it, is to have a strategy. And that's what I call Mastering Probability. Also happens to be the same name of my daily newsletter service. That's available for you here at TFNN.com. Because, you see, using tactics without strategy, in my opinion, is a recipe for failure. And failure is not an option in our playbook. And that doesn't mean that we don't incur losses, because we do. Losses are a part of any successful trading strategy. It's what I refer to as spoilage. Just as running a household means we throw out food that's gone bad in our refrigerator. You know, there's money going down the drain there, too. But to limit our loss and control our risk in trading, we always use stops. And that means we have an exit strategy, one that always covers both sides of the trade. That's what's referred to as a bracketed order, or one cancels the other order out there. And if you use a system like this, you won't ride the market down as most folks did from 2007 to 2009 or at other periods of time out there. So today, folks, today and every day, let's do all that we can do to think like a strategist, because strategists, they will slay the tactician all day long. So let's take a moment. Let's review one of our tools. This is the tool, well, I just say, hey, like a farmer, please allow me to plant what I think are some seeds of wisdom for you to think about. Number one, there's nine seeds of wisdom out here. Number one, people are unreasonable, illogical, and self-centered. I say love them anyway. Number two, if you do well, people will accuse you of being selfish. They'll accuse you of having ulterior motives. Guess what, folks? Do well anyway. If you're successful, you'll win false friends. You'll gain true enemies. Hey, succeed anyways. Number four, honesty and frankness. Guess what? They make you vulnerable. Be honest and frank anyways. Number 5, the good you do today, guess what? It's going to be forgotten tomorrow. How true is that when it comes to trading and investing? Here's the deal. Do good anyway. Number 6, the biggest people with the biggest ideas can be shot down by the smallest people with the smallest minds. Guess what? Think big anyways. Number 7, people favor underdogs, but always follow the top dogs. Fight for some underdogs anyways. Is USA team today, are they an underdog? I think we ought to pull for the USA team, don't you? How about number 8? I'm talking about the World Cup soccer, obviously. Number 8, what you spend years of building can be destroyed overnight. Build anyway. And number 9, give the world the best you've got. And guess what? You'll get kicked in the teeth. I say give the world the best you've got anyway. My outcome, as always, well, it's to give you the best that I've got. Our call number is 877-927-6648. It is Terrific Thursday. This is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. As we kick things off here this morning, flat markets in the futures. Dow futures up 3 points. Trading at 16,774. S&P futures off a half point at 1949. NASDAQ up a couple of points, trading out at 38.17. King dollar's up 8 pennies. It's trading at $80.34. Gold back up $4 right now, trading at $13.18. Silver down 8 pennies at $21.03. A quick peek across the globe out here. Over in Germany, the DAX is off 3 points, 5 points. That's a flat market. FTSE's down 3 points, a flat market. In Asia last night, yeah, the Nikkei up, 0.25%, up 41 points. Hang Seng, man, what a move out there. 331 points to the upside, up 1.5%. Shanghai up 0.6%, up 13 points. So where do we begin our day? Where do we begin our day? Let's begin our day by taking a look at the futures market. Let's go do that. Let's take a look at the daily charts out here. Let's look at 4 time frames. Let's do that. Let's take a look at the Dow futures. We'll take a look at weekly, daily, 240-minute. Let's make this a 120-minute time frame out here. So if you're watching us on TigerTV, and I hope that you are, and even if you're listening on your radio, well, you can't watch us there. Not just yet, but on your mobile device, you most certainly can, because you can go to the homepage at TFNN.com, upper right-hand corner. You'll see a little button out there, 3 little smartish type phones on it. Click on that. The show will stream live to you. Of course, you can always catch the archive. You can replay this show. You can take a look at these charts out here, help you with your technical skills and trading out there, at least things that I look at. And you can do that because of this show being archived on Channel 9. Now, if you're watching us on Tiger TV, we're looking at the Dow futures. That's what's on my screen. Upper left-hand corner is a 120-minute time frame chart. Upper right-hand corner, 240. Lower left is the daily, and the bottom right is the weekly. Let's start with the weekly chart first. Weekly chart here. Full bullish mode, no question about it. No real reversal signals out here yet inside of the Dow futures on a weekly chart. That would be a little different story if tomorrow at the close, what you would see would be a close below 16,699. So that's a number you want to put on a piece of paper out there. What's a bearish engulfing? You know, it's an area. It's a candlestick. It's a Japanese candlestick that really lets you know that the bears are trying to beat their chest out there, and that's what it will take tomorrow. The other number to be watching inside the weekly chart, 16,401. 16,401 is a resistance level. That means price ought to move down there. If it moves down there, it ought to bounce off that area. If it doesn't, boy, that brings into being the 16,148, brings into most certainly the swing point taking you back here into the trading session in February. Why is that not working well? Oh, well. The February swing point, right around the 15,260-ish mark. That's what the weekly chart is suggesting for us. If we take a look at the daily chart out here, daily chart is going to give us a message, and this is important because a turn is going to take place on a daily versus a weekly first. And the number to really be watching is right around where we're trading right now in the futures. Looks like about 16,769. We're at 16,776. So it's very important. That is the daily market profile, what's referred to as the unfair low. You get below that area, that starts to say, hey, if you were long the Dow, depending on your time frame that you're trading, you know, if you're on an intermediate term time frame, longer term funds, that's not the message. But if you are more of a swingish type trader out there, you get below 16,769, it says you better really tighten up those stops. because then it starts to send the message that, you know what, maybe we've got a deeper retracement going on, and we always take a look at our swing points. Those are the major intersections where we see price changing direction, and it's the logical area for price to go back and try to get to. Sometimes it just does a retracement of that area. In this case here, if it were to move back, it would be back into the May 20th area. That's right around the 16,300-ish type range. That's what the daily chart. So the daily chart is up against an area that's saying, hey, it's kind of support, and it failed a couple days ago, came back just slightly yesterday, just trading above it right now. If you take a look at the 240-minute chart out here, you're going to see that it is trading right below its unfair low. So it's trading below support. And that level is at 16,784, and you're at 16,778 right now. So this is giving a message of struggles out here inside of the Dow, inside of the Dow futures. So we'll be paying attention to that most certainly today. 120-minute time frame chart. Again, so you get these different time frames out here. It says you break 16,733 to the downside. Then you're going to have three charts in unison, 120-minute, 240-minute, and daily, that are suggesting that the move is to the downside. You ought to at least come back and test the June 18th area, right around the lows of 16,650. So that's what's going inside of the Dow futures out there. We take a look at the strength in the marketplace is going to be the NASDAQ futures, the NQ out here. So if we switch over and take a look at those charts, we're going to see here is the canary in the coal mine, or from the bullish standpoint, this is what the bulls are really hoping for and looking for. They're looking for the NASDAQ to really lift the boat higher out here. Why do I say that? Well, let's start with the weekly. Let's do it the same way we did it before. We start with the weekly out here. And on the weekly chart, you're going to see the area of support ought to be its old unfair high, right around the 3660.55 area. No bearish signs out here on a weekly chart. If we take a look at the daily chart, what the NASDAQ did yesterday on its daily chart, it got above its resistance level. What does that mean? It means it's bullish out here. And that level out here, and watch for this today, 37.9950. You're trading at 38.18 as we speak right now, so about another 19 points. But it did break above resistance that it had not been able to do ever since the time frame of June 18th out there. So the daily is bullish in the NASDAQ. 240-minute chart says, hey, you've got a little bit of resistance overhead. That's at a price level of 38.28 out here. So an additional break above that would be positive, would be very bullish out here. The 120-minute time frame, it's right up. It's bumping its head right now up against resistance. That's at about the 38.19 area. So we're going to go to break here in just a moment. When we get back from the break, we'll go take a look at Goldilocks, which earlier this morning sold down. We'll take a look at the level right now here on its 120-minute time frame. It's found its resistance point, which is at 13.1880. And when we take a look at a 120-minute chart out here, what we're going to find, we come back, we're going to take a look at the one of the Rhodes Momentum Indicator tools out here. We're going to see a price relative strength divergence pattern to the upside that formed. And we're going to see one of Stevie's hammer candles. We're going to easily be able to identify where support is. Because if that level fails, if you're long, you're wrong on a 120-minute time frame. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A little pop here in the futures markets. Dow futures up 28, the S&P up about 3, NASDAQ up 7. Popping in the market here, the free markets, you've got Iron Mountain Inc., IRM, is the ticker symbol. It closed last night at 29.77. They are trading out at 35.45 out there, so that's going to be trading above its most recent swing point. That's the swing point from June 9th. Take a quick peek at that. I would set up a large A to B equals C to the top of that swing point. That's that major intersection where it most recently saw a change in trend out here. That was on the trading session of June 9th. The high is 32.07. It's had a nice little sign of strength in here. Recently formed that little gap. Don't be afraid of gaps. Don't get too caught up into the gaps get filled aspect of it, because if you this candle here, which I'm looking at, is May 14th. If you were going to use that same analogy and be afraid of gaps, well, you're telling me that if it actually had opened the session of May 14th, and it opened right where the prior session on May 13th had closed, and then moved all the way up to where it did, where it closed at about $29 and $29.72 with volume there, that you would be telling me that candle, where it didn't have a gap and just a wide-ranging bar, that would be okay and that would be bullish, versus you wanting to be afraid of the gap out there. Gaps are your friends, folks. They can absolutely be your friends out there, and that was nice widespread accelerated volume. Looks like it's going to try to take out a B point, a swing point, and then that would be forming an A to B equals C. That's a lightning bolt pattern we refer to. The 8 point on this, I'll use the junior one. I'll use the small one. That's the May 9th low out here. That's your A point. Your B point is going to be that high from June 9th, and the C point we'll use as yesterday's candle session. So if it takes out that high at 32.07, does it with volume, offers the promise of $35, even Steven, maybe 36.46 as its next move higher, and that is on Iron Mountain, not Iron Man. Moving to the downside out here, also the upside, you got Neighbors Industries, NBR is a ticker symbol. They closed at 27.30. They're at about 29.90 right now. Auxilium Pharmaceuticals, I know I could get it. AUXL closed at 21.23. It's trading at 21.90. No big deal out there. Bed Bath & Beyond, the leader dollar-wise to the downside in the pre-market out here, closed at 61.11. It's trading at 56.50 right now. That's curtains for it. We'll take a look at that stock chart after the market opens. Barclays, PLC, BCS closed at 15.71. They're trading at 14.50 out there. That does not look good for that equity. Deutsche Bank, DB is a ticker symbol. They close at 36.48. They're trading at 35.36 as we speak right now. Now, let's go back to Goldilocks. Let's take a look at gold here. We're going to look at a couple of different things. First, let's look at the daily chart out here. So the daily chart on gold, I've shown this here over the past. If you come up to the swing point highs back in October of 2012, and you just simply draw a simple trend line, and the next touch point that you would use, that I'm using for my trend line, is the high that was formed back in March 17th. Little key reversal session as well there. You can see right now what's transpired here over the past 5 trading sessions after that nice big move higher, that nice big wide-ranging bar, which most would interpret as an initiation move. Stevie would say, nah, not so fast. And then the not so fast is complemented by the 5 trading sessions in a row of just simply moving sideways. Initiations of moves are when people jump on board, and that's going to push price higher. That has not happened. Therefore, and initiation moves also come off of the bottom. Well, the bottom was really back here inside of Goldilocks back on June 3rd. So we haven't really seen an initiation move inside of Goldilocks. Instead, we saw price run right into the resistance area. Now, is this bearish? No, not yet, because gold hasn't broken down. In fact, it's the looks like the 200-day exponential moving average, a red squiggly line that's acting as support, and you've got the trend line. You can see each time it's tried to thrust down into that area, it's been held up. So it is acting pretty well, considering it really isn't an initiation move. Also, now what does that mean? Well, let's just take a look at what the chart, what we can use as far as information to understand what Goldilocks is doing. And here is where I said, hey, if you're long, you're wrong. If you see a break on a 2-hour chart, that's critical. That doesn't mean if it punches through there that you'd want to wait for that candle to close. That is the session that took place at midnight. That was midnight on June the 25th out here. We're June 26th already. That low, an important low to watch, is 1305.40. It's a hammer candle. Hammer candle is a one-candle bullish signal, typically a reversal signal out here, and when they fail, it's really important. You can see as price was moving down this morning into the hammer, the bulls were back. They're really trying to support that level. So, if it doesn't support that level, then it could come all the way back to that breakout right around the 1280-ish level. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow trading off 30 points at 16,836. S&P down 3 at 1956. NASDAQ Composite off 2 points at 43.77. Russell 2000 off 60 cents at 11.82. NDX 100 down 3. New York Stock Exchange off 22 points right now. Let's go take a look at, so moving to the downside, let's take a look at Bed Bath & Beyond. It's trading off about 8%. It's down $5 and change. Let's go see what it is doing, what kind of pattern that it has out here. So gapping down this morning. So this is going to be the third gap. Does not look like a 3-gap play out here. That means it has not found a low. Typically a 3-gap play, that third gap, if it is in, if the gap is wider than the first two, both in dollars and percentage, then that can be an exhaustion move out here. But if we take a look at the first gap, the first gap was a doozy. I'm looking at this dollar-wise. You can do the math on it, but the gap basically is from the trading session of January 8th. The low out there is $79. Very next trading session, the high, which was 72.20. 72.20. How about that? 72.26 out there. That was the high. So you do the math on that one versus today's gap out here. Let me widen this up just a tad. This equity here had closed at, or the low yesterday, 60.56, and the open up here this morning at 56.50. So I don't think I don't know that it makes it dollar-wise, or maybe make it percentage-wise. but not dollar-wise. Not even. So where is this thing headed to? Boy, good question. Let's take a look at the weekly chart. In fact, let's put this on a weekly time frame, because the daily just says it absolutely wants lower price. Okay, now we're taking a look at swing points. Well, it's below these swing. No, it's coming in. Okay, so if we take a look at the weekly chart, you've got a high volume weekly swing point inside Bed Bath & Beyond that takes you back to December 17th, 2012. Volume down there was 33 million shares. The low is 54.33. 54.33 is going to be tested. Now, it's coming in here so far with only 15 million shares for the week. We only have 2 days left in trading, but it did gap down this morning. It is on a weekly basis here, getting into a extended oversold condition. But if it takes that area out, let's take a look at this a little bit further back. Let's take a look at the A to B equals CD to downside. Let's see if this crossed the B point. On a weekly basis, that would be the February 3rd low. That had 14 million shares out there, and when it got through there, yeah, it did. Actually confirmed it. The week of May 5th did it with 15.8 million shares out there. And that, if we take a look at that, A to B equals CD, get a price projection here for Bed Bath & Beyond. That price projection is going to take us, the first one is taking it to $52.28. That is the 1-to-1 A to B equals CD to the downside, but 47.19 would be in the cards as well. That is Bed Bath & Beyond, and that $47 would take you, in essence, back to a little bit of a sign of strength back here on April 4th, 2011. So it does not look good for BBBY out there. We've got Netflix off about $4 this morning. Let's go take a look at Netflix. Strong-looking stock chart is my recollection. Let's put this on a daily time frame, though. Let's go see what's going on the daily chart out here. The weekly says it was up against its swing point, so it had looked like it wanted to really take out the swing point. That's the trading session from March the 6th out there, which didn't have much volume, 1.7 million shares, and it moved into that area with volume, moved in there with 2.6 million shares. Right now, you've got Netflix just moving sideways. Its market profile low out here is 434.01. If we're to close below that, that would be something to pay attention to, because you can see coming off of the bottom out here, which was the April 30th area, it has not closed below a market profile low on the entire run up into this 450-ish, 440 range right now. So any close today below 434.01 would not be a positive statement for Netflix out there. Let's take a look at Wynn Resorts. Wynn Resorts popping to the upside out here right now this morning. No news on it. It's up about 2%, up $4.65 out here. Let's go see what it is trying to accomplish. It's got a little bit of a, what is it? Let me just pull this back just a little bit further on the left to have a look-see out here. Look-see says, today it's up above a resistance level. As long as it closes above 203.32 out here, that's a somewhat bullish. Let me see, where's the big supply line? I don't really see one out here inside of Wynn Resort. So at this stage, just kind of been consolidating ever since the April 9th area. So Wynn Resorts looks like it's going to take another run for the May 2nd highs out here, right around the 222.33-ish mark. It's trading at 208.53 as we speak right now. If we look at Elizabeth RDEN, RDEN is the ticker symbol, down about 13% this morning off $3 and change. Not a good scene here. It's taking out a swing point. So this thing has had several gaps. Let's look at this. Not a three-gap play, most certainly, that I see here, but this has had nothing but gaps down ever since going back into the time period of where it made a high out here back in May of 2013. So let's pull this back a little further. Number of A to B equals CD patterns. Let's go take a look at Elizabeth RDEN on a weekly time frame out here, get a better feel for what it may be doing. Let's take a look at it. So it's trying to take out a weekly swing point out here, and volume on that weekly swing point, which is the May 3rd level. May 3rd, so interesting. That is 4.4 million shares, a low, 23.45. You're at 23.38 right now. Volume here for the week, so far, only 1.7 million shares. Again, that's trying to take out 4.4 million shares. But this is not looking good. I see all the high-volume bars are downdrafts. Take a look at that. You want to see some markdown? Maybe Elizabeth Arden is marking down some of her cosmetics out there. If we take a look at it, pretty wild. You want to understand what? Do you understand the most fundamental aspect of a stock chart is the technicals? Because look at this. You want to understand what buyers and sellers are doing? This is a weekly chart. Elizabeth Arden, off of the highs, is the week of January 28, 2013. If you look at the kind of the bottom-ish, the second panel from the bottom on my screen out here, you'll see the last time we saw any sign of strength in here was back in August of 2012. Did volume of 2.5 million shares as was moving higher. It moved a bit higher, made an actual high the week of December 17, 2012 out there. And just kind of consolidates sideways. In other words, here's another example of what some might have called an initiation move. Wide price spread, accelerated volume here the week of August 6th. Notice how it just moves sideways. When you see something like that, it is not an initiation move. Initiation moves are all aboard. People are jumping on. It's going to move price higher out there. That's not what even happened here inside. It's definitely not what happened here inside Elizabeth Arden. Instead, what was called distribution was taking place. Right? People, the folks who had pumped it up were just simply going ahead and selling into the market. Those are the folks that thought that, hey, that candle signal was an initiation move out there. Not at all. Now take a look at what it does when they decide to start marking down the stock. That began the week of January 28th. Big volume to the downside, 4.3 million shares. Okay, distribute some more stock as it moves back up into where it broke down from on that January 28th week. Okay, able to sell some more, and then how about August 5th? Another big volume week to the downside out there, 5 million shares. Those are the volume. Take a look at this bar back here, the week of January 13th, 2000, 4 million shares to the downside out here. How about the week here of May 12th, 7.3 million shares to the downside out here. Elizabeth Arden not looking very good out here at all. And as far as where the volume bar of support is, man. Well, I'd have to say, because swing points are where price gravitates to, this is July of 2010 in the $14 area. And that is what the weekly chart for Elizabeth Arden is communicating to us. If we take a look at to the upside out here, you got Zulily. ZU is the ticker symbol out here. Let's put this on a daily chart. This thing here has not been trading long enough to really get a ton of information from a weekly perspective. Let's go see what it is doing out here. Lily, it's up above its unfair high, but it's up above the sky so high. It's a resistance area of 39.50. How do you like that for a singing voice out here? It's going to run into a real problem as it tries to get into the lows. If it can make it up there, May 6th, that low is 45.40 out there. Why? Because you've got a big supply line. Any of those folks that bought on the trading session of May 6th, they woke up the next morning to see that Zulily took him to the zoo. Took him downtown to the zoo out here as it moved a lower gap down with volume out here, and it did it with 6.1 million shares. And any of those folks on that trading session of May 6th, they're just praying. They are doing everything they can to say, come on back. I just want to get my money back out there. That is what a supply line is all about. That is on Zulily. You've got, what else we have out here? And let's go take a look at the futures market. So we'll go back and take a look at that. Well, how about just the cash market? So the Dow's off 51 points, S&P down 8, Nasdaq off 14, Russell down 4, NDX is off 13, New York Stock Exchange, the leader on the way down, it's off 0.4% out here. Gold's back $6, silver off 10, light sweet crude off 79 cents right now. So far, an early morning little reversal that we see inside of the markets out there. I say, if you're long, be careful. Be careful. In any event, let's take a look at, let's go back to those futures market charts out here. Let's do that. Let's put up the daily. As we'd been mentioning on the Dow, the number to be watching was 16,769. You're at 16,715 right there. Not a good scene. The NASDAQ, which I said yesterday had really broken out on its daily chart. Well, now it's right back into its potential line of support that it took out yesterday, which is about the 37.99.50 mark. It's going to be important to watch the NQ. If it can hold that area, that would be bullish, and the NASDAQ would be saying, hey, I'm going to go ahead and lift all boats higher. If it can't hold that level, then you want to be watching, what does it do to at around the 37.62, 37.71 mark out there. So it's a fight right now between the Dow and the NASDAQ. It's a fight between the ES Mini, the S&P futures, been kind of neutral. It's been just traveling with inside this little bit of a consolidation. It has not been able to break out 1954.75. Even though the RSVP was sent out by the NQ department, it appears that the ES Mini did not respond to that RSVP. If they would have been able to get above 1954.75. So they're not joining in on the party out there. Apparently they want to sit back and watch the World Cup game out here and not do a whole lot. Inside the Russell 2000 area to be watching out here today because it did put in a new market profile. It says resistance now 1185.27 and support should be about 1168.35. That's on the daily charts out there for the four futures indexes. And the reason why we take a look at that is because we just have more data out there to provide us with a indication as to what's going on out there. If you're asking me, hey, what's going on with your favorite currency pair, Steve Osan, I would have to say, well, let's go take a look at the Euro-Japanese yen. If we take a look at it, you can see it's moving lower. Here's the daily chart. It's going to go ahead and make another run for that 0.786 Gartley buy pattern, and we know because of how long this has moved sideways, well, this is what Stevie knows out here, because of how this thing has moved sideways, if this thing fails, it turns into a butterfly. That butterfly says that you'd see the Euro-Japanese yen move into about the 134.16-ish type level, and that would take you into the bottom of its nice rising price channel out there. Boy, you break that, folks, and guess what? You have a real change in trend. This one goes back into July of 2012 out here. But first, it's got to break its swing point low. It's trading into that swing point right now. If today it closes inside 138.32, it offers the promise of going down and testing the 137.65 level. It breaks that. That is then, and when I say break it, I mean close below it. Then you're looking at curtains to the downside inside this currency pair. This is the liquidity gauge or lack thereof, and that's what it's doing when it moves lower. That is the carry trade when it comes to currency markets out here. Let's go take a look at the VIX index. Of course, the VIX index a couple days ago had made one heck of a move out here. Went from a low of 1087 on June 24th up to a high of 1227 out there, and it did it, and it had more than a 10% one-day rate of change out there, and that gave us a 70% chance of a bounce yesterday, and most certainly that's what we saw. So yesterday's move was to be expected. Was absolutely to be expected. It usually happens within 2 trading sessions. Most times it happens the next day out there. With the ARMS index being above 2 was a real good promise that it was going to go ahead and give us that bounce. Now, here is the key. And the key is the 50-day exponential moving average. So today, the number to be watching, which has acted as great resistance ever since the time frame of, what's this date out here? April 16th. Remember, April 15th, we put in a nice low out there inside the market's little key reversal session inside of the NQ out there. Well, that area, the 50-day exponential moving average, it is held as a resistance level. We'll see if it can do that again today. Looks like it's going to be tested. The number there is 1235 or 1220. A close above 1235. I don't mean 1236, but a close above 1235. That gets you into real carnage territory, folks. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, 4 Side Fund Services, LLC.
4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC. 4 Side Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow's off 117 right now. S&P down about 14 points. NDX, NASDAQ Composite off 29. NDX 100 off 25 points out here. Russell leading the charge on the way down, off 0.8% out here as we speak. So, selling right off of the bat out here. Again, just to really keep things simple. I think the simplest of all, there's lots of uses for that VIX index. I'll go back to it here. Take a look at the 2 uses that I use it for. The 1-day rate of change, as we had a couple trading sessions go on June 24th, and it gave a clear message of a bounce. Now, you may ask, how did I use that bounce? I used that bounce to add 2 positions out there. Didn't know exactly where the market would bounce to, but, was looking for a bounce to take place. And once I saw that going on, that's when I took a look at adding to some positions out here. And if you'd like to learn that or understand all those things, if you think it would benefit you to understand the tools that I trade to all of my subscribers. See, my newsletter service isn't one of these services that just says, hey, just do this. I give you all the reasons why. That way you get to make the decisions yourself as to whether or not it makes sense for you. But let me keep things simple here right now. as simple as I possibly can get with regard to what I think is the second best use of the VIX index, and that is when you use the 50-day exponential moving average. So today, the end of today, doesn't mean, hey, because of here's what's going on at 9:55 in the morning, somewhat irrelevant, and we know that the 50-day is act as a really good guardrail, really good area of resistance, and so that's the level of 1236. You see that get taken out with some conviction out here. So which conviction? I don't know. Let's say close above its most recent swing point high of June 17th at 1289. Yeah, that seems good to me. You see it close up above that. Then what you don't want, it depends on the style of trading that you are, right? But if you were a swing trader, but you would not be taking long positions here. You would want to wait to see that 50-day exponential moving average get back below. The VIX get below the 50-day exponential moving average. So real key trading session out here. And if you take a look at my chart out here, just you can see that anytime the VIX index gets above the 50-day exponential moving average, we'll go back to January 23rd, 2014. By the way, the bottom chart is the S&P 500. The top chart, if you watch this on Tiger TV, happens to be the VIX, and you can see all of the real carnage being done out there with the VIX being below or above the 50-day exponential moving average. And you can go back through history, through the chart, and if you use this as a tool, as a real good guideline out here, it will benefit you immensely. And this is, in my opinion, is the single best use for the VIX index, as opposed to even spending time, wasting time trying to trade the vehicles that are out there. They're just nothing short of a nightmare out here. Just trade the indices, the indexes off of this, and you will do much better out there. In any event, so that's what's going on. So that's what I would really be focused on today. We've seen enough reversal signals out here, and of course, we do want to say happy anniversary today to Larry Pesavento, because it is a second P index day of the week out here. So he'll be with us obviously today doing the futures show, the futures hour at what time is he? I think he does the 12 noon. He's going to be on right during. So you're going to have to be listening to Larry and watching the USA Germany game out there while he's on. I think it starts right around the 12 noon time frame. What do we have going out here? Let's see. Anything substantial upside out here to take a look at? Iron Mountain just on fire. You've got Methode Electricity, looks like, MEO. That looks pretty bullish out here. That's breaking above resistance. Has some nice volume inside of the equity. And, folks, it is terrific Thursday. Thanks so much for joining me. Really appreciate you spending the time with us. If you're off to start your day, have a terrific day. And I'll look forward to seeing you first thing in the morning. If not then, maybe in about, probably about 8, 9, 10 minutes from now. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.